Hello and welcome, and we're looking at a gold chart, and it may not look like much, but in fact is telling us quite a bit. It's a swing line chart. The black line represents the gold price, and we'll scale back and put some more sense towards this market. But on the short-term time frame, we have two separate lines, a blue line, or two blue lines, and two red lines. They indicate Fibonacci levels. For I have the gold prices in here. Therefore, the swing line takes this level times 3, 3, 3, this level times 2, 2, and 2, and finds out if it's an uptrend or a downtrend. This number is lower than that number. So it went ahead and said, okay, the price of gold is 1763. I'll take the low price. An example of an uptrend would be, say, for example, this 1848. It's a little higher than its previous one, so it went ahead and took 1886, which was a high. What I like about this is you're always going to get the lowest and the highest prices, and oftentimes I don't like line charts because it shows a bottom at maybe $10 a share, but that day went to $7.50. That's the type of reason I don't like it, and that fixes it. Okay, now on the right hand side here, I asked the computer what the highest number over 50 days and the lowest number, and the highest number over 200 and the lowest. Therefore, I can calculate the Fibonacci, which is exactly what I've done, on an exponential level. So what this tells us right now is that we have came down towards the first 38.2% retracement Fibonacci on gold. Has it found support there? We don't know that yet, but oftentimes like we see here, it can do such a thing, and if it falls, will we find support at the second one? And when you hold them both over the long run, really that's really when it comes really big. Now let's reduce the scaling on it. I don't know how many days it's going to be, but it's, actually I do, it's going to be about 80, 90 or so. So there's another look at the gold chart. So within the entire run since May the 26th, it has stayed above its 38.2% retracement over the 200-day high and the 200-day low. It has, for the extreme most of the time, not only been above this bottom blue line, but even the upper blue line as well. Now, another thing to point out on a technical level is whenever you make a bounce to this line, and you come up and you go through here, it's not that much of a surprise now to make a further bounce, maybe down towards this red line, which really shows us where's support on a breakdown. Well, it's around 1640, 1650. I see 37 there, and it's a little bit below the line. So I'm going to say around 1650 is the area I'm expecting it to bounce if we continue to go further to the downside. Let's put another 100 days on here. And we'll see how some other, might have to increase the scaling because I got 1200 on a bottom point. So again, this red line, this first 38.2% retracement, the last time that gold has retraced 38.2% would now bring us to the start of the year, right in here at around 1300 or so on the gold price. It found support and it had a nice bounce. So hasn't been there for a while. Now, the theory that I would use within this, there seems to be a pretty good chance that we may head lower. But what I would be expecting first is that we'll at least first make a run up to about 1850, 1860. We closed at 1812. I think there's a good chance we could at least make a move there because it's really more neutral more than anything. And when you have the neutral market, yes, you have the break to this fib level, but at the same point, you come up to this top here, it may not be resistance, or it may be resistance, and then that area I was talking about support around 1860, maybe it would be support after it goes past 1900 on that scenario, basically. And overall, if we look at this blue line, how it's played out, in this area here, when it was resistance at the very start of this chart, it managed to have a run to this lower level where then it found resistance just for a bit, and once it got by it, it was pretty much lights out. You see here, well, why didn't we have much resistance in the end of February? Well, that should tell you that we got a nice run coming later, which of course we did. And you say that in advance now, well, that was just so easy. Well, I'm saying now that if this is pretty much it for support and a break above this 1900, that it's still showing that the fuel is still engaged. I'm going to finish this off by putting in 300 more days. This will be the final one that I'll do. I can go really to 200, and even before then. It's just I can only do Fibonacci for so many of the days. We'll fix the scaling so that what was the bottom? 700, so we'll go 650. And it doesn't even have that period, so we even increase it some more. Line's a little too big. Okay, again, since October the 23rd, and even well before then, basically since the market got going again, it has found support here once, lifted off higher, came back again to this line again, lifted off higher, came back down to again, then lifted off higher. So what's the pattern here? Yes, the pattern is that there's a good chance it's going to come down to that level. And that's it, because you know that it's a matter of when. So maybe this isn't the matter of when, and if that's the case, it's going to go right back to where you know the ultimate goal is, or what the ultimate outcome seems to be, is that it's going to continue the uptrend. And finding the whens is tough, but because it happened here, you can start to say it's overdue, and it will come back at some point. But the longer it takes, that can mean more explosive moves to the upside. Alrighty, that is it. Thank you for tuning in, and have yourself a great day. Bye-bye.